How is Kelowna's real estate market actually doing? I mean, there's a lot of noise out there in the media watching the housing market in Toronto or Vancouver, or what you're really watching on it. In this video, we're going to break down Kelowna's real estate market. We're looking at the last week worth of sales, what is actively been selling on the market, active listings, seeing what inventory is doing. So, and you're getting a transparent view of what's actually happening in the real estate market. I get it. I'm biased. I'm a real estate agent in the real estate market. It might be a little bit biased, and I'm trying to remove all biases from this and showing you transparent numbers so you, as the consumer, can make educated decisions. And that's really why I do this weekly market update. At the end of the day, I'm showing you real, raw numbers, information, what's happening week over week. So if you don't like that, then maybe go somewhere else. That's just what I'm saying. But if you're looking to get raw numbers, give us a call. Pick up the phone, watch this video, whatever you need to do. We're going to give you real, raw information. And I will break down what my current take is on the real estate market after we get into the hot sheet. What is up, everybody? Mark Coons here with Selling Kelowna Real Estate Group. So we're going to get into it and break it down. Without further ado, let's take a look at the hot sheet. All right, so as we're looking at the last week, and we're filming this Friday, October 24th, about 4 o'clock in the afternoon. And so we've had the entire week worth of sales here. The Thanksgiving long weekend is gone past behind us, and we're heading into it. Keep in mind, we're also having a rate announcement next Wednesday on the 29th. So we might see an uptick again, downtick. We'll see what happens when the rate announcement, if there is a positive, maybe if it stays the same, if prices drop, that sort of thing. But what we're seeing here is 201 active listings hitting the market. Part of that is going to be part of these canceled listings here. So we got about 149 listings coming off the market and about 201. So total change in inventory in the last week has been right around that 50 additional, not including these sales here. So we did have 100 sales, which is a solid number of sales. And that has been increasing. If you look at the last few weeks that I did, yes, I know I did take a couple weeks off as we're figuring things out and figuring a direction. But when it comes down to it, I think it's important for you as the consumers to have this information right in your hand. I also talk to some home sellers and they do enjoy watching these. And home buyers, this is really as raw as it's going to get on a weekly basis. And then the other thing is price decreases. 140 price decreases last week. Common, what we've been seeing, dropping a little bit. I think people are starting to tie in, maybe getting a little bit less aggressive heading into winter. Now we're breaking down and looking at the sales here in the last week. So average sales, 101 sales in the last week. We're seeing lowest one, Big White. We're starting to see some sales up at Big White. We got a couple on the lower end sales happening there. So that's good news on the recreational property side of things, just telling us how healthy the market is. People have cash. Yeah, they might be not going and spending as much money as they normally had been. Prices are probably coming down or are coming down, obviously, but lots of activity in Big White showing people do have cash and they do feel either having a recreational property, something that'll cash flow, right? Because cash flow is king. And Big White, the short-term rentals, is still making money. We have a cabin up there. Rentals are doing pretty good and a lot of pre-books right now. Indicators to us, the economy-wise in Kelowna, people do have, I just have that feeling people do have cash on the sidelines. Not going to be for everybody. Obviously, there's going to be certain industries where people are hurting and definitely feel for it. But when you look at the top end of the market, we've seen lots of activity here in the 1.2 and higher range. 19 sales over 1.195, but we got a $5.1 million on McDougall Road, 2.6. So there's lots of higher end properties selling. You can see where it is. People are making moves and going there. So it's something to keep in mind. People are spending money and buying. So now we're going to look at the active listings and sales for year to date for 2025. So we'll see how our active listings are starting to drop. We're down about 200 listings from where we were at the end of last month. And that this is up to date. So I'm doing year to date. This is giving us the most accurate information for October. Otherwise, if I were to put it on the wider horizon, we're not getting October numbers. But as you're seeing, sales are potentially going to be low. We got another good week ahead of us, and there is another rate drop potentially coming on October 29th. So we'll see at the end of next week how sales, if it increase. But we're on averaging about 101 sales, and you can look at 287 so far in October. So homes are selling. You can see here. So we're trending a little bit lower, and we want to put this out on a little bit longer time horizon. This is going to help you see the month over month issue. It's going to give you a running number, but something to consider. Total inventory, as you can see here, putting it just month over month, we can expect to see we're roughly around the same number. 200 less listings is the month prior. We're running the same numbers as what we were in 2024. So it's history is going to repeat itself in the last year. We're going to see inventory drop another 300 in November, and then another 500 or 400, close to 500 listings coming off the market in December. So you can see how year over year, where you can see the change in inventory, and no matter the market, no matter the inventory, you're seeing roughly the same amount of number of homes coming off the market. You got about 300 here, about 200 less listings, but 10% of the listings are coming off the market. If you do on a percentage basis, it all makes sense. You come up here and coming into January, you're looking at totally different numbers where you're coming in 2023, 1,600 active listings, starting to pick up a little bit more in January, but that's the seasonal slowdown we're heading into. So if you're a home buyer in the marketplace, that's just something to consider, that you might have to wait for inventory to come back into where we're going to be. You might have to wait until March or April there. So if you can afford to wait, if you don't need to buy, that's a good indication of where we'll see a more. But home buyers as well, one thing to consider with the change in inventory, you're also dealing with more competitors. So looking at the sales in March and April, we see the highest amount of sales in competition. So as a home buyer right now, you do have a little bit more negotiation power. So if you're seeing something similar and something that might work for you, might be a good idea just to consider it. And you might be able to get it for better prices. It's tough to know what prices are going to be in spring, but traditionally, spring prices do go a little bit higher. And normally speaking, so if you're buying and selling, it's all relative. So if you're buying and selling in the same market, if you're in the same type of property, it's pretty well relative. You can make the argument that move up buyers are benefiting more right now, and they are. It's the market's coming down 10%. Then you're selling at $1 million home and you're buying a $1.2 million home. So you're making a little 10% on the extra $200,000 difference if you are buying and selling. So it is a little bit irrelevant. Downsizers slightly worse off, but oftentimes they're going into condos or single level homes where there is a benefit for there, because there's a little bit higher inventory and a good opportunity there as well, where not seeing the same amount of competition on the single family home side of things. And I just had this conversation with a home buyer this morning looking at the market. And my indication to them where I see the market going is different for the type of property you're looking for. So when you're looking for a single family home, condo, or apartment, or a townhouse, anything like that, my take is going to be individually based on your individual circumstances, first off, and don't want to take everything as one. So when you're looking at it, you need to take and look. So my take on the real estate market is this is the sales year to date for the property subtype. So we're seeing 1,700 total single family sales. Apartments, 909, townhouses, 558. Biggest thing happening right now is all the government changes. And I've been touching on this in my weekly email. And if you look and if you want to get a hold of it, sign up in the link below for the weekly email. Every Wednesday, you're going to get information, but I also put it on my blog. So if you want to go back a couple weeks to my real estate blog, and the future of Kelowna's real estate was the title of the blog, and looking at it, Bill 44 is part of government regulations from provincial government that is mandating all municipalities to essentially rezone a bunch of lots. So what was the factor that came out of this? City of Kelowna just rezoned 26,000 lots in 2024. So when you're looking at that, you're seeing a lot of higher density ability where the development lots that previously were developable, you really took off a lot of that value. So we're seeing a depreciating value for the development lots, lower acquisition cost potential for potential developers. However, the developers are still not building right now because numbers don't make sense. You look at things, what is being built right now, and a lot of it is purpose-built rentals. You're looking at the apartment side of things. So not inventory that's going to hit the resale market. Yes, there's builds like Water Street by the Park and Mavala and Aqua, all those big buildings that are completing and taking ownership. But once those get absorbed, what is coming up down the pipe in 5 years from now? Because there is a lag in the marketplace. So that is just something, if you're looking at the apartment side of things, to continue to watch. Another thing to continue to watch is coming in 2026, there might be a change in the short-term rental restrictions. When you look at the short-term rental restrictions, City of Kelowna is going to have a vacancy rate above 3% again for 2 years consecutive. So if you're familiar with the short-term rental restrictions, the government mandate was for cities, municipalities under, if only under 3% for a 2-year period. So now they're above 3%. So we're going to see what the mayor and council does. And there's a report coming. So expect a little bit of changes coming and potential ability for short-term rentals in previously short-term. The mayor has alluded to potential changes coming to that. So something to watch and consider if you are in the apartment build. But where I'm really going with all this is because of all these mandates, everything's going to multifamily. You look at it, they're trying to build more housing and create more affordability and really bring costs down. They're really building smaller places. So yeah, they are bringing costs down, but they're building smaller places. So housing technically is coming down price wise, or rents are coming down, but doesn't mean single family homes prices are coming down. I feel if you are looking to get into an investment and you want to have better long-term gain, you'd be better off if you're flipping between a townhouse, an apartment, or a single family home. Your better gain is going to be on a single family home. All things else considered equal. You might get less of a product. You might not have a nice of a house. You might have to put a little bit of money into it. But at the end of the day, you're going to have a yard and a lot that a lot of other homes don't have. And they're not really releasing more single family lots in Kelowna. So when you're looking at it, your home, as time progresses, is getting more and more attractive to the people that are looking for that single family home lifestyle. Townhomes would be right behind that, where you are getting into it for a decent price, but costs are increasing on that one. And you're not really going to be able to, without costs coming down, whether it be DCCs or building costs coming down, those are some things you need to consider when you're looking at it. So there is my rant on the Kelowna's real estate market, the future outlooks, things to think about. And it's not just bias. You got to take individual ones and individual circumstances in. I did coach some buyers to wait 6 months at least until we decide if it's going to be a good market for it. So yes, I might have some biases, but if you want to get a clarity call, you want to see if something's going to make sense for you, pick up that phone, give us a call, shoot us an email, whatever you need to do. We got your back.